Welcome back to the program. It's the last lap of the show, and the quarterly importation of Nigeria's Q1 importation of capital inflows into Nigeria is our focus. Nigeria's capital importation for the first quarter of 2018 came in at $6.3 billion, and that's a 594% increase. But joining us now to discuss this is Chief Executive of AfroInvest Securities Limited, Ayodeji Ebo. Thanks for joining us.
Thanks for having me.
Show. Let's hear your thoughts on this report, which was released yesterday by the National Bureau of Statistics.
Yeah, interesting. We saw that was able to buttress the significant influx we saw in the fixed income market as well as the equities market. About total capital importation was about $6.3 billion. Out of this $6.3 billion, about $4.6 billion, which is about 72% of the total capital importation, came through foreign portfolio investors. And out of that, we discovered about 60 or 70% went into fixed income investment, while the remaining 30% went into equities. And when you compare it on a year-on-year basis, that's about, comparing it $6.3 billion compared to previous quarter about $0.3 billion. That's over 459% jump in capital importation. And that can easily be traceable to, when you look at traceable last year, last year was pre-I&E window, which there was a low base effect, and a lot of investors, especially foreign investors, due to FX challenges, could not bring in their funds or were not comfortable to bring in their funds. So that really attracted a significant inflow into the market within the first quarter of this year. But sadly, when you look at or further break down the figure, you discover that just about 5% accounts for foreign direct investment, which is the most critical part that the economy needs to grow, that can create employment, that can also help fill the infrastructure gap, that can also assist in terms of strengthening the growth within the economy.
But so why do you think that was the case? Because it was just a whopping $246 million as against what we had in the preceding quarter 4 of 2017.
It still boils down to, I think, policies. There's still this constraint in terms of enforcement of contract in Nigeria. So for most foreign investors, even when you want to either go into public-private partnership with the government, or you see maybe there are opportunities within certain space that you feel you want to invest, the policies is not sufficient enough to guarantee that your investment may be secured. So even we've seen what's happening within the power space. For those that have invested in the power sector, the government have placed a cap on the tariff that can be charged. Where you also see the oil and gas space, in terms of what is going on there, the PIB law have not been passed. Even when you also look at the telecom space, we saw what happened to Etisalat. Within that space, they are not able to raise the tariff, which companies that you feel that has been privatized. So some of these things are sending very wrong signal to potential investors in the economy, and that can easily be traceable to the low foreign direct investment that has been attracted in Q1 2018.
All of these points that you just enumerated probably speak to the fact that this kind of confidence that investors have in the Nigerian capital market, or in Nigeria basically, is a short-term type.
Yes, it's hot money. Seeing on the back of high yield environment, especially within the fixed income. This time last year, yields were as high, when you look at true yield, was as high as 21–22%. Very attractive. But we've seen that moderated significantly. In the last week, we've been seeing offshore investors selling down significantly on their holdings within the fixed income market.
That includes T-bills and bonds, right?
Yes. As at yesterday, the average yield increased to close to 14% from almost 10% a week ago. So you see that when you say hot money, that may also create some kind of pressure within the I&E window. Though we know in terms of CBN is also trying to at least manage to ensure that there's liquidity within that window.
That also informs the reason for all these interventions.
Significant magnitude of investment, 4.6 billion. If there's any major shock within our economy, withdrawing, taking out 4.6 billion that just came in within a quarter may destabilize our FX market, which is significant. Yes, results have been improving, close to $50 billion. If you take almost $5 billion from that, you know, it's also, it sends a negative signal even to foreign investors. But by and large, we feel that we need to go beyond just attracting foreign portfolio investors, short-term investment, and see how we can attract foreign direct investment if we really actually want to grow our economy.
So what then do we need to do? MPC meeting is in the next 2 weeks or thereabout, 21st and 22nd of this. Do you see the MPC cutting down on MPR rates? I feel
cutting down the MPR rate really, currently in quotes, MPR is really having no major impact on the economy, yet the reference rate, but CBN has been able to drive down rates using other methods, bringing down the rate of OMO rate, that the open market operations. They've been able to use that to adjust the rates in the market. So cutting down the MPR rate will not necessarily, in the first place, bring down lending rates. Secondly, that will not have any impact on fixed income yields. We've seen, based on what happened in the market last week, coupled with tight liquidity that triggered sell-off even amongst local investors and pushed up yields, we feel CBN is able to control the fixed income, especially the treasury bills rate, using the OMO cutoff rate to guide the market. So I would expect that the MPC would at least hold the MPR at current levels, 14% levels.
Okay, thank you very much for your time. Ayodeji, boss CEO at Afrinvest Securities Limited. We appreciate you coming down to the program.
Thanks for having me.